I cannot stress this enough. And I will say it 1,000 times in this course and probably 5 times just in this one unit alone. But when using any technical analysis tool, remember that you, one, want to stack tools and never utilize just one. And two, you need filters to regulate your entries and exits so that they will hopefully keep you out of bad trades and increases your chances of entry on one that has a higher probability of winning. But let's look at this zone trading strategy using support and resistance in its simplest form. Trading support and resistance can be as simple as just buying, at support and selling at resistance, with your target being the next support or resistance zone. This is also known as zone to zone trading. But as I have said before, you want to wait for confirmation to validate your entry. And that can be as simple as, looking for price to maybe bounce and consolidate, at a certain level before you are entering, or that you look for candles to show a loss of momentum. If you have large candles coming up, you want to see a lot of small candles, and maybe that shows you loss of momentum right before strong buying or selling pressure, kicks in and then price reverses. Maybe you have a confirmation like that. Confirmation could also come in the form of candlestick patterns like we looked at before, where you have candlestick patterns showing possible reversals, engulfing candles, dojis, different indecision candles. You have chart patterns like we went over, head and shoulders patterns and other reversal patterns, your M's and W's. You have institutional candles. You have other indicators that give agreement or confluence with your trade entry analysis, and you want this. You would build this strategy and test it out both in back testing and forward testing before you ever take it into the live market. And I will be covering how to do that in depth in the next units, so you'll have that as well. To trade this zone-to-zone method, you would begin by marking all of the market swing highs and swing low zones. And in this particular graphic, you have, your major zones being here at the top. And we're assuming that there is, a lot of price action to the left that we can't see that had these as previously marked zones. So you are making some assumptions. However, for our graphic, in marking up zones, if you're looking at your chart, just start with marking the highs and the lows. Just what you see. Start marking with what you see. Start with the easiest thing. Then, once you have marked your major zones or all of your market swing highs and swing lows, then mark any of the minor zones or places that the market maybe has just temporarily acted or bounced or has consistently reacted, even on a short-term basis, as a retracement even to a larger impulse move. You had a large impulse move here, and this was just a retracement zone. But had you marked that retracement zone, it would have paid off because price came back and retested that zone, or at least close to it, a couple more times. And, sometimes it blows through it. This time you had where price went past that zone, but you want to mark these zones in these areas where you see price moving and bouncing. And support and resistance is always dynamic, because you can't guess what the market is going to do. You're never going to know. And you always want to trade according to what the market is showing you, not what your emotions tell you or what you think or want the market to do. You want to take what is being shown. And so when the market shows you of, hey, I had a reaction right here. I had a reaction right here. There was a reaction right here. You can mark those, and you can mark them as areas of interest. And when price comes back into those zones, you can observe what price action is doing, and you may have put together some tools in your nifty little trader's toolbox that gives you some idea or indication or high probability of what the market might do at that zone, what type of reaction it might be about to have. Once you've marked your zones, then you are looking for price to close beyond the zones. Now remember, when price is moving up on this graphic, it looks like it's just a straight line, but the truth is price is doing one of these things, and it is going up and down, and you're seeing a lot of movement in here, okay? You are a smart trader, and so you are marking these zones up on a higher time frame, and then you're maybe watching for entries on a lower time frame. So these zones are marked, and so as you go in and you're looking for price to close beyond the zone that you have already marked as an established area where price reacts, you're going to be placing your stop loss on the opposite side of the zone from the direction you think price is going to go. And then your target is going to be the next zone. As always, you need not only confirmation of your entry, but tested confluences that agree with your zone bias, as well as a plan for avoiding fake outs and liquidity engineering. You can't avoid this every time, but you can place rules in place to give you a great market edge. And so if we just kind of look at what zone to zone trading is, it's basically entering at one zone and holding your trade into the next zone. Entering at one zone and holding your trade to the next zone. Entering at one zone and targeting the next zone. Then you enter at that zone and you target the next zone. You have this zone for entry and you target the next zone. It's literally zone to zone trading. And so you're targeting the next zone just depending on which side price is closing on. You're targeting the next zone. These zones are marked. And so when price starts moving away from the zone, you're looking to target the next zone. And so your trade is there in the middle. As price closes above, let me clear this off. As price closes above this zone right here, you're looking to target this next zone. You're placing your stop loss below the zone. Price moves up. Now you have a little fake out right here because you see we have this zone right here. We see price coming above. We have whatever confluences we have, and we say, oh, we think price is just going to see. We think price continue, had this movement here. Look, it tested a bunch. We think it's going to come and make us some money. It's going to move on out. However, what we see is that price moved past the zone before doing a strong reaction at this level, which is either a level or a manipulation point. But regardless, let's assume that we see price closing on the other side of our zone. That gives us an entry. We see our candlestick, our chart patterns or candlestick setups or our indicators, whatever our confluences are, we have those. And so we go, okay, I'm triggered into an entry. I'm going to place my stop loss right here on the other side of the zone. I'm going to take my entry here and I'm going to go. Now you either would have taken profit or you would have gotten stopped out when price reversed and hit your stop loss here because price, had a lot of selling pressure and reversed in the same way. Regardless, you're going to win some trades, you're going to lose some. But what we have now is an established zone. And we're seeing price close on the other side of this zone right here. We're assuming we're triggered into a sell for that zone. So we're going to put our stop loss right here on the back side of the zone. We're looking for price, probably our entries right about here. We're looking for price to continue dropping, and it does. And we have a win. And now we have price here at this other previously established zone. And we're watching what price is doing because we're smart traders. We have our zones marked, and so we're watching for entry, and price is bouncing and it's bouncing, and we have set rules and a great trading plan. And so we have our setup and we see our entry is triggered. And so what we have is we put our stop loss on the back side of the zone and we take our entry. Our entry is probably a little bit on the other side of the zone as we're seeing what price is going to do. And we look for price to drop. Now, one of two things happen. We either took some profit in here, and so we're in profit, or we have our stop loss here. And if you look, price didn't quite come to our stop loss. So hopefully our stop loss wasn't triggered and price went on. But even if it was, even if you got stopped out, no problem, because we execute over and over again. And all we have is the next setup where we have this zone. This zone has been there for a while. We've been trading off this zone. Price is now closed beyond the zone. We have it here. We have a bounce of the zone. Price is closed beyond the zone. We're going to place our stop loss on the back side of the zone. Our entry's probably around here somewhere. And what happens? Look at that one. It's beautiful, beautiful, beautiful. Comes all the way down to our next targeted zone, which is perfect. Now, again, what do you have? You have where price actually came down below the zone. So you might would have taken a sell. You might would have gotten your setup right here, and you might would have said, oh, I think price is going to continue to drop to the next zone. And so I'm going to do my target right here. And you might would have looked at that and said, okay, I'm going to place my stop loss on the back side, and my entry is right here. And so I'm in this trade, and what happened? Price came down to about right here and then sharply reversed. And that happens sometimes. Okay, we lost that one, no problem. But what happens is we still have this as an established zone right here. We get triggered into an entry as we see price closing on the other side of the zone. And so our stop loss, as always, is on the back side of the zone. And what happens? Price comes all the way back to our next zone target, beautifully hit. Then we're looking at our setup now for a sell, because we see that price is closing below the zone. We have our entry, stop loss back here, and price drops again. We now have this zone that we're coming into again, and we're either letting this trade that was here ride out and continue on, or maybe we took profit, closed it out. But regardless, we now have this established zone here, and we're triggered into another sell. And so we're probably entering somewhere here. Our stop loss is here, and we come down to the next zone. And so zone to zone trading is exactly like it sounds. It is trading from one zone to another zone, previously established zones, and that you want to have some confluences or some filters. Now, the other thing is that a lot of people that do zone to zone trading only trade with the trend. So in other words, if we're right here looking at the 1 hour chart, they may say, I am putting my directional bias on the daily chart, and the daily chart tells me we're only for buys. And in that case, you would never be looking for any of the sells in here. All of those would be discounted. You would only be looking for setups for buys, because your bias tells you that's where the largest impulse moves are going to be. And so that can also filter out some of your trades. And so again, I'll have a whole video on different confluences and how to trade them in some of the more advanced courses, just my strategy courses. But just know that there's so many things that you can put in with support and resistance to make it a profitable strategy. And so let's look at one more example of how to use support and resistance as a core piece of the strategy. And this next one is a very common strategy that also uses it, again, like I said, just really as a backbone of the way that strategy is set up. This strategy is really popular and can actually be highly profitable trading strategy using simple support and resistance levels. And it is called the break and retest. You'll hear this over and over again, and you'll see it so many times in the market. And it basically just involves exactly like it says. It involves price blowing through a support or resistance zone and then returning to retest that zone and then moving off in the continued previous direction. It is a really fun strategy, and with the right confluences, it can have a really high win rate associated with it. Break and retest, like I said, is a very popular strategy. And when price breaks through the support and then returns to retest that support zone, it uses it now as a resistance. So remember, like at its core, a zone needs to have been, a support zone or a resistance zone to start with, and then as price blows through, it needs to come back and retest it as the opposite, though, as support or resistance, whichever one. So it just means it's the opposite direction. So in this case, we had price come up. This is a previously established zone. Price rejected here and came back down to this zone right here. Price then blew through this blue zone right here, came up, rejected here, and retest this zone as support now instead of as resistance. It was resistance here. It was resistance here, and now it's support. And so as price broke through the resistance zone at the retest, that's your entry. We had one right before that where you assumed price was coming up like this, and this was a level of previously established level of resistance where price couldn't push higher. Then price blew through that zone, came back and retested that established zone. And so now it is a support level, and so that is your entry. Again, you're looking for these zones that were used as either support or resistance. You want price to blow through that and come back to retest to continue on in the same direction, where basically you're kind of trading pullbacks. But part of the confluence and part of your filter is that you're trading pullbacks, but you want to see a break through and a retest of a previously established zone. So break and retest, again, we see another example right here where we have this level. You have price that rejected here that we can see. You have price that rejected here that we can see. So we know that this is an established zone. And what we see is price blow through the zone, doesn't stop at all, but it comes right back to retest the zone. Now the zone is no longer a zone of resistance. Now it's being used as support. And soon as it bounces off that and price begins to move away, that is a valid entry in a break and retest strategy. You're seeing the same thing here, as that you have a previously established zone. We've seen a bounce here. We saw a bounce here. We saw it be used as the opposite here, where right here it became support, where before it was resistance. And so now we also saw it as support here. But what we see here is price blew right through that area of support, came down here and bounced. And so as it comes back to retest, you have a valid entry because it broke that zone, came back for a retest, you enter, and the way that the setups is exactly the same, is that you have your stop loss either at the other side of structure or the other side of your zone. Your entry is probably right here somewhere, and you ride that trade out. You have from there, you have a previously established zone right here. It has been used as support. Here it's been support here, and it's also been support here. And so if we're looking at that zone, we see price blow through that zone. It bounces around for a while, and it comes right back up to that zone and tests it now as an area of resistance. And so even though it doesn't go far, and just depending on how many pips this is, if there's only 5 pips, it might not be worth it, but this could be, 100 pips, 200 pips, just depending on your pair and your strategy. And so even though, it didn't go far, you could have absolutely taken profit there, or you again may have had filters that it wouldn't have, you wouldn't have picked it up because it possibly would have been counter trend since you were putting in higher lows. However, just on support and resistance, it's a valid entry because this zone right here is a previously established zone. Price rejected, it closed beyond it. We put our stop loss here and we look to take a sell entry. But what we have then is we still have this previously established zone that has been used as support and resistance. We had price that moved up and actually did a retracement and had an impulse move up through that zone. Basically didn't respect it. Price just moved on through and came right back, and now it is respecting that level as the floor again, as the support. And so that in the support and resistance strategy, you know, as long as all your other confluences agree, becomes a valid entry. And you would place your stop loss on the backside of the zone, and your entry is probably around here somewhere, and you would ride that out either into when price breaks structure or to the next zone, just depending on what your trading plan calls for. We also have an entry, and I didn't mark it up because it just put way too many arrows on this graphic. But if you look at previously established zones, you have zone here, you have all of these zones, you actually have price that started here, moved down, and came back to retest this zone here. And so in the break and retest, as price broke this zone here and came back to retest it a second time, so you had a valid entry here as it broke and retest, and you've also got a second entry here. And so basically that would look like it came and blew through, came back to retest, and so you have a solid entry here as well. So any established zone that you have in a break and retest strategy, when price blows through that zone and comes back and uses it, you know, either as the opposite of support or resistance, depending on your confluences giving you the proper setup, that can be a valid entry. That, like I said, is a very popular strategy, and that people, you know, make that on the retest all the time, and have various different filters. You'll see a lot of teachings around that, but that is also another solid core strategy that can be used. The problem comes in when people only use that, which is why I reiterate over and over and hammer into your impressionable trading psychology mind that we do not just use one thing. We layer upon layer upon layer. We want strong yeses to multiple different confluences before we take an entry. And we're going to dive deeper into that as we go. We are here on the Aussie Yen, and I just wanted to kind of give you an example and draw out some zones on a live chart of how I would maybe come and analyze a chart and draw out zones. So I'm looking at the chart, and I said, keep it simple. What do we see first? Well, on the page, the chart that we're looking at, we see a high here and we see a low right here. Those are the first two things we see. And so I might withdraw my zones to encompass both that high and that low. Okay, what do we see now? Where do we see that the market stopped, or where it couldn't push past for a time? Well, I see the market stopped right here. I see, you know, where the market came down, pushed up here. I see where, you know, the market came and pushed up, had a retracement here before impulse moved down. You can't, you know, we talk about major and minor levels of the market, and so you look for, you know, zones where a lot of bouncing has happened in the past, where you see that there are evidence of order blocks in the past. I see price bouncing here at this zone on a retracement several times, so I might withdraw a zone there. If we just look and we come and just draw zones where we saw, you know, these market reactions here and here, and we already drew one at the bottom. And so now let's just look. All I did was just mark up some swings that I saw in the market, these areas. And we see right now, just starting here at, well, we can even start right here where price came up and we hit resistance. Price came, we had a zone here that wasn't drawn to here. We hit, you know, a support here, came up, price was resistance, price bounced, resistance again, hit this zone, bounced a little bit, came down support, resistance, where previously this was an area of support. Now it's an area of resistance. Price wasn't able to push back. We see price goes down, and this area right here now becomes an area of resistance. Price isn't able to move past that. Then price pushes through we see this area of this zone right here that was an area of support. Now price is just falling through this area of support, has no reaction whatsoever, comes here, but you see twice, 2 bounces really off this area of support that's now resistant. Price isn't able to push through, comes and bounces around before finally price pushes through that area of support, and now, you know, doesn't have respect. It did bounce a couple of times in there, but it didn't make the market price reject or reverse. And then price comes up to this zone that was drawn over here and is also bouncing and showing consolidation in that zone. And if we come over here, what we see is price did reject that zone that was drawn, came back, also rejected this zone here that earlier was drawn as an area of support, which is still serving as support. Price comes up, bounces here in this zone, and earlier that was an area of it was an area of support, then it became an area of resistance, and now over here it's an area of resistance again. And so you see these levels as price moves through these zones are very fluid. They're sometimes used as support, sometimes used as resistance, depending on what side of the zone that price is actually trading on. Now, what you'll also see is a lot of times the zone is kind of fluid, because remember, it's a price range. It's a range over here. And so sometimes the zone will need to be larger. Sometimes the zone needs to be smaller. You can always refine zones on lower time frames, but drawing them again is just as easy as looking at the swings in the market, marking them, drawing your zones there, and seeing how price reacts. When support becomes resistance, when resistance becomes support, and being very fluid with that. Your analysis and the type of trade you're looking for are going to depend on your trading plan and what your entry trading time frame is, what your trend bias time frame is, and any other time frame management that you have in there in your trading plan as to what you look at. But drawing support and resistance levels doesn't have to be, difficult. Now, those were kind of more major areas of support and resistance, and you'll find zones that were very respected for a time just become obsolete later on. But you'll also see where, like here was the bottom of this zone, you might would have even drawn the zone up higher, further back to the left, but you see down here the zone is actually where it's being respected is down here. And then if you get over here where the zone is bouncing here, you're actually even pulling it a little bit further down, and you find, right through here, the zone is bouncing a ton, of retesting this area right here of resistance. Price absolutely breaks through that area with no thought whatsoever, comes and now is bouncing again as, the floor, using it, can't go past it. So now it's an area of support. Price breaks through finally, and now is coming and bouncing in that zone almost as a form of resistance before it finally moves down to the next zone. And so you see it's very fluid when you draw these levels. And we drew them just off of this one market push. We drew just these levels based on these swings of the market, and I made it draw the zones all the way across. And look, we didn't even see this, and the market absolutely reacted here. The market reacted as we just saw, became support, came resistance, resistance becomes support. The market didn't really react to this zone over here at all. Matter of fact, the zone over here that it was responding to would have been more like down here where it catches these two bounces. But you also had a minor level of support right here, where if you, let me turn that to be a different color. So we'll make that, just a little bit of a blue, and let's zoom in right here where we see the market bounces on this particular zone, where here, let's change that color too, where here you have, or we're looking at this green zone that I drew a while ago, where price is bouncing here. And it is absolutely, again, the floor. It's your support. Price drops through, comes back up, presses through almost like it's not there, and then all of a sudden starts respecting it, not once, not twice, but 3 different times where price is validating that zone, is a zone. And if you even want to look at the bounce, just depending on how you drew your zone, price also bounced twice right here, and even had a reaction here before it dropped through to this old zone. So you see price using it in both ways. When we while ago covered a break and retest, with using support and resistance zones, both of these are, active and very valid break and retest entries. If you look at right here where we had the zone drawn, price came through, had a push down right here, and it bounced around in this area, bounced here, came back. Any of these where it broke through, came back and retested, depending on your break and retest, price wouldn't have moved far, but it went 100, and I say that it didn't move far. I forgot we were on the daily time frame. Over 7 days it did go up 120 pips. So that's not anything to sneeze at there. That was actually pretty good. But this same exact zone here, price just blew right through, pushed up, came and retested twice. Both of those would be a beautiful break and retest entry. And the same here, is that you had price break through, come up, create a new higher high, and then a new higher low that was a retest of a previously established horizontal support and resistance level that now is forming, the support before price takes off. So that would have also been, a valid entry. You have zones that we drew a while ago that coming back through, that we see price didn't really respect that at all. However, there was a new zone that price was kind of coming through, and respecting it. A bounce here, you had a couple of bleed through here, and so you could possibly have moved that down. You have this zone right here where if you look and move it here, price is bouncing like crazy off of this zone. So sometimes you have to move your zones around. Sometimes that range of prices that were so prevalent, a year ago, a month ago, a week ago, can be a little bit different. Now you have institutions seeing where other institutions are using range. We have prices folding in, at certain ranges. And so it's not an exact science. If it was, everybody would be a millionaire off the market. It's that you're learning a strategy and a setup, and you have a set of rules that try to filter out the losing trades that might hit your stop loss, and try to trigger you into awesome entries for times that it does work in your favor. You have a bounce here on this zone that was drawn so long ago. You have another bounce here and another bounce here. I mean, this zone was drawn forever ago. You literally right here, can you see that? Yeah. You literally right here, if I zoom in, had where price broke through, came back and retested again, this minor zone that we drew a few minutes ago, came back up and retested this old zone, dropped again before breaking through. So this could have also been an entry as price came back down to retest here. So these zones that were drawn in the past can also have influence, possibly or not, in the future. You're looking at what price told you, or what price is telling you that it's doing, what it told you that it did, and what it's telling you right now. But just because you draw and have a line on the chart does not mean that just because price is coming up and you're like, oh, here's this line on my chart that I drew from earlier, that must mean that what is going to happen is price is going to come up, and because I drew this awesome line, price is going to plummet. So I'm going to absolutely, enter a sell right there. There was nothing that told you price was going to reverse there besides a line that you drew on your chart at some point back that you have extended into the future. And so when we look at this going forward, you want to have the chart tell you, now in all fairness, you had, you know, a bounce here off that zone. You had a bounce here off that zone. You had a bounce here off that zone. So even I would have been looking at that as a point of interest, but there was nothing here where momentum, I mean, look at that big, huge institutional candle right there. That's a lot of momentum. There was nothing there showing you that price would bounce, you know, but cool enough, you know, price blows through and, you know, doesn't respect that, but it does come back in for a retest. And if we take and, you know, just look at how it respected any of the zones going forward, it bounced a little bit and showed some consolidation after a deep pullback. Here, you might could have taken an entry here. And definitely, if you look at support and resistance, you know, this zone right here served as support here and almost as support right here as well. Then price broke through, came back up and bounced a couple times before breaking through, you know, so then it became resistance for a couple bounces right here. And honestly, the zone should have been kind of like that if it was a correctly drawn zone. But again, we drew it way back, you know, because this is the daily chart. So, oops, where we actually drew that, you know, was when was that? So that would have been June 2015, and now we're in 2022. So, you know, you got a 7-year difference there of where we drew the zone and then where we are now, that price is actually still reacting, you know, at that point. You know, will price come down? And like I said, this isn't a pair that I trade, so I don't have an analysis on it, you know, or is that the upper part, you know, where it comes up and bounces and now, you know, it's gonna come on down. You know, so again, you can't pick tops and bottoms, but you can see that there's certain movements and certain patterns that the pair that you trade makes. And so again, support and resistance, you got to get in there, draw your levels, you know. Well, you know what I can do is now we can also drop down and look at them on lower time frames so that you can see. So right here we're on the daily. Let's drop down to the 1 hour, and on the 1 hour we see where we have these zones that were drawn on the daily, and there's so much information here on the 1 hour. We see, you know, lots of zones that we might would have drawn here on the 1 hour that we couldn't even see on the daily. And let's change that color to be a different color so we know it's here on the 1 hour. You know, here on the 1 hour we look at, we've got, you know, this bounce here. We've got 2 bounces right here, and we've got, you know, where price doesn't quite come up here. It actually blows through again, and then comes back for, you know, a actual bounce and retest here. So you got that this zone was absolutely ignored here, but then absolutely validated, you know, here. And this was just based on what we see past history doing. You know, always look left. It gives you clues. We see a minor level of resistance right here where we see that price came up. It was resistance, you know, price came up, support, and then resistance, came up, support, 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 you know, blows through it, comes back, retest, resistance. This would have been a valid break and retest entry, you know, right here for a sell, because what we had was a previously established zone. Price came up, you know, was respecting that zone here, came up, blew through with no respect to that zone here, comes down, oops, comes down, comes down to right here, and then retests that zone, which is that, you know, absolutely valid entry before we would hit the next zone and hopefully have taken some profit there. You know, you also see right here where price again bounced, did a break and retest. You know, price pushed up from this zone, came up right here and retested this level again right here, you know, as a support before moving up a little bit. And depending on your trading plan and your trading style, this is on the 1 hour, and so depending on where your entry was, it's still 100 pips. You know, I probably need to look at this pair. I haven't looked at it too much with my current strategy, you know, but it's pretty consistent on some of the things. A few minutes ago, you'll see it in a second, but I recorded the fib video here first, and so it was the first time in probably a year or two that I've looked at this pair, and you'll see I'm saying it a lot. I'm like, wow, I haven't been on this pair. It's pretty consistent at this retracement zone. So this would be a pair that you would look at and you go, wow, it's very, you know, consistent at revisiting some of these support and resistance levels. But this is why people like support and resistance levels, because when they draw them, it gives them some indication of what possibly could happen in the future. But just because you have a line drawn like right here, you know, we drew this line from a zone we saw that was valid 7 years ago. Right now, is price respecting that zone? If you just enter a buy or a sell based on what price is doing, you're probably going to lose your account. It's going to hit your stop loss 1,000 times. Like, you don't know what it is. You've got to have confluences of where the market is going and why you're entering, other than you just drew a random line on a chart. And so therefore, if price is above, you buy, and if price is below, you sell. There's got to be other things that are telling you how to enter and when to enter and why to even draw that line. You know, there's a zone right here that in my current trading plan, that would be a valid zone, and this would be a valid zone. Both of those are entry levels, valid entry levels for me in my personal trading, you know, plan. And what you see as far as support and resistance go is, you know, that we've got support here twice, price blows through, you know, breaks that zone, and then bounces here twice again, you know, of using it support again. And so both of those are valid. Then, you know, price bounces around in some consolidation. That one's also a valid bounce. And just depending on how you drew it, you've got two more possible entries here. Depending on where you're taking your profit, you know, these are pretty good swings. It's 129 pips from that entry, 124 from, you know, that one. You possibly could have taken another 120 pips from that, you know. So even with this one, I mean, that's a 90 pip bounce right there. You know, those are pretty good entries, even though price didn't go up. So it would just be your trading plan of how that you would use entries. You know, in this, you also see right here, even though it's part of another you know, zone, that there's a zone right here. You have price bouncing. Right here you have another bounce here, one here. You've got a bounce here. You've got, you know, two retests right here after price broke back through, came back and retested, which is a valid break and retest. You have, you know, a bounce here. All of those could have been sell entries right here before price finally broke and didn't come back to retest that zone. However, price did come, you know, over here if that zone was a little higher, which matched this price here, this zone right here. You had where it was support here. You had where it was resistance here. Price broke through, came back, and retested again at the same zone here, and retested for a second time here. So again, I don't trade this pair, although I'll probably give it a good look, and you'll see, like, when I show you the next pair, I need to just probably take, for the people in my course, at the end of the course, I may use this pair and create just a strategy on the fly and show you how to put together confluences using this pair, because you've already seen me do it. You'll see it in a minute for fibs, and this for support and resistance. So again, keep it simple. Draw your tops, draw your bottoms, draw your major support and resistance zones, draw your minor support and resistance zones, places where the trend changed or price was not able to push past. Draw your zones, move them around as you need to, expand, contract them, look at them on smaller time frames, look at them on larger time frames, and get in and really put the practice in to kind of master support and resistance. Because I'm telling you, a lot of strategies, even if that's not a core piece, they're in there. Even if somebody goes, no, I don't trade support and resistance, I trade fibs. Okay, you're still trading, projected support and resistance levels. It's really in, a lot of things, which is why I took the extra time, to try to really dive a little bit deeper into the support and resistance zones, because it's key in a lot of the things that I teach and a lot of the things that you'll come across. It's a truly solid trading tool to help you look at things for going forward into the future and helping you put together information to make educated and hopefully predict trade biases that have a really good probability or potential for winning for yourself going forward.